Michael, step back from the routing files now.
On what grounds? What exactly are you claiming?
Once is a mistake. Twice is suspicious. Michael Anthony Hauser did this thousands of times across 7.5 years and left a paper trail for every single one. By the time this footage was recorded, federal agents already knew exactly where the money went.
The casino payment request sent to your account.
Access doesn't prove intent. Anyone in payables could have touched those entries. You cannot
Records trace the payments to
That
you.
still proves nothing, and I think you know it. You're reaching, and any judge.
He would surrender more than $7.5 million in cash, casino credits, and forfeited assets before he was even sentenced. $24.9 million stolen across 7.5 years. $8.2 million in unreported income hidden from the federal government. The accounts payable manager of one of the largest tribal casino operators in the United States had been routing the Muscogee Creek Nation's casino revenue into bank accounts under his own name, and then sending most of it into Las Vegas VIP gambler accounts under that same name. Federal prosecutors would call it a moral inversion. The Internal Revenue Service would name it one of the top 10 cases of the year. Before we go any further, I have to ask you something. When you walk into a casino, who do you think is actually watching the money? Drop your answer in the comments. And if you are new to this channel, hit subscribe. We cover the institutional accountability cases that do not always make the national headlines, but should. Michael Anthony Hauser was born in Tulsa, Oklahoma, in the late 1980s. His family settled in Broken Arrow, a fast-growing suburb on the east side of the metro that had once been farmland and oil patches, and that by the time he was a child was filling in with cul-de-sacs, megachurches, and chain restaurants strung along the Creek Turnpike. His father worked in middle management at one of the regional oil services companies. His mother kept the house and the schedule for 4 children. The Hausers were not wealthy. They were comfortable. The kind of family that took one vacation a year to Branson, drove sensible American sedans into the ground, and put up a tasteful string of lights on the porch in December. Michael was the child teachers remembered as polite and quiet. He sat near the front in elementary school at Indian Springs. He kept his work neat. His 3rd grade teacher wrote on a report card that he had a careful mind and a steady hand, and his mother kept that card in a kitchen drawer for the next 30 years. He was not the loudest boy in any room. He was almost never the funniest. But he could memorize a multiplication table in one sitting, and by the 5th grade, he was the kid the other parents asked their children to study with. By high school at Broken Arrow Senior High, the pattern was set. He was on the honor roll. He played JV baseball for 1 season, and then did not play again. He took a part-time job at a Sonic drive-in on East Kenosha Street the summer after his sophomore year, earning $6.15 an hour, wearing a black visor and a yellow polo, and he saved nearly every paycheck. Friends from those years would later tell investigators he had been the rare teenager who actually opened a savings account, who actually balanced a checkbook, who actually understood what an interest rate was. He could quote you the difference between simple and compound interest at 16. He could explain a tax bracket at 17. He enrolled at Northeastern State University in Tahlequah in the late 2000s, an hour east of Tulsa, in the heart of the Muscogee Creek and Cherokee homelands. He chose accounting as a major almost immediately. He worked through school at a bookkeeping office that catered to small Tulsa contractors, where he learned the rhythm of accounts payable, accounts receivable, vendor invoices, and end-of-month reconciliations. He graduated on schedule. He sat for the CPA exam and passed 2 of the 4 sections on his first attempt. His first salaried position out of college was at a small accounting firm off South Memorial Drive in Tulsa, where the partners gave him exactly the kind of work he was suited for. He was assigned to the back office. He reconciled. He matched. He filed. He never missed a deadline. He never argued with a client. He was the employee a controller dreams of, and at age 22, his starting salary was $38,500 a year. In late 2011, he applied for an accountant position at the Muscogee Creek Nation Gaming Operations Authority Board. The board was the gaming arm of the Muscogee Creek Nation, a federally recognized tribe with a citizenship base of nearly 100,000 and a sovereign territory spread across more than a dozen counties in eastern Oklahoma. The board operated multiple casino properties, the flagship of which was the River Spirit Casino Resort along the Arkansas River south of downtown Tulsa, a property that on any given day drew close to 10,000 guests through its doors. His interview, by every internal account, went well. He came across as humble. He came across as exact. He answered every question with a number. His first manager wrote on his orientation paperwork that he was detail-oriented and quietly capable. His starting salary was $47,000. He showed up early. He stayed late. He brought his lunch in a soft black cooler and ate at his desk. Over the next 5 years, he climbed. Promotion to senior accountant. Promotion to lead accountant. Performance reviews that used phrases like consistently meets expectations, works well independently, and demonstrates initiative within established procedures. He married a woman he had known since college. He bought a starter home in Broken Arrow with a 30-year fixed mortgage. He had his first child. He coached a season of Pee Wee baseball at the local YMCA. He drove a 4-year-old Chevrolet Tahoe with 112,000 miles on it. By any external measure, he was exactly the man his neighbors thought he was. In July of 2016, the board promoted him to accounts payable manager. The promotion came with a salary bump, a new badge, and a corner cubicle on the 3rd floor of the administrative building. It also came with operational control over the vendor payment architecture of one of the largest tribal casino operators in the United States. On the day of the promotion, he posed for a quick photo at his new desk. He was smiling. His wife had brought him a sheet cake with white frosting and a piped congratulations in blue. The cake was cut and shared with the team. He took the last piece home that night to his kid. That same day, by federal indictment, the embezzlement began. To understand what Michael Hauser did, you have to understand how a tribal casino actually pays its bills. The Muscogee Creek Nation Gaming Operations Authority Board, later restructured and renamed Muscogee Nation Gaming Enterprises, operates as the sovereign gaming arm of a federally recognized Native American tribe. Its revenues are not corporate profits in the conventional sense. They are tribal revenues. By federal law and by the Indian Gaming Regulatory Act, those revenues flow back into the operating funding of the Muscogee Creek Nation itself. They underwrite tribal healthcare clinics. They underwrite tribal scholarships, tribal elder services, tribal child welfare, tribal infrastructure, and the day-to-day administrative operation of a sovereign nation that spans more than a dozen counties in eastern Oklahoma. When you spend $1 inside River Spirit Casino, you are not just spending $1 at a Tulsa entertainment venue. You are funding a government. The casino's accounts payable system was the financial spine of that funding architecture. Every vendor invoice, every contractor payment, every utility bill, every consulting agreement, every food and beverage purchase order, every slot machine maintenance contract, every facility's expense ran through accounts payable. On a property serving 10,000 guests per day, the volume of vendor traffic was relentless. Hundreds of payment requests every week, millions of dollars in monthly disbursement, thousands of vendors on the master file. The architectural check on bad actor conduct inside that system was supposed to be segregation of duties. In a properly controlled accounts payable function, no single employee should hold both payment request generation authority and routing instruction control. One person creates the request. Another person approves it. A third person manages the master vendor file. A fourth person reconciles the bank. Independent internal audit reviews samples on a recurring cycle. External audit reviews annually. The Muscogee Creek Nation's tribal financial oversight architecture sits above all of it, with the authority to compel records and require corrective action. That is the model. That is how it is supposed to work. The model only works if the segregation is real. The model only works if the audit cycle is actually independent. The model only works if the credentialed manager who sits at the top of the accounts payable function is held in check by other credentialed eyes. At MNGE, across the 7.5 years that followed Michael Hauser's July 2016 promotion, the model did not work. The accounts payable manager seat consolidated authority that should have been split. The credentialed manager controlled the payment request generation. The credentialed manager controlled the routing instruction architecture. The credentialed manager controlled enough of the accounts payable cycle integrity that single actor capture became not a theoretical risk, but a practical opportunity. No one inside the building was looking specifically for fraud from inside the building. The compliance focus was outward. It was on the gaming floor, on the cage, on the count room, on the high-stakes tables. Those were the places where casinos historically lost money to bad actors. Those were the places where cameras watched cameras. The accounts payable office on the third floor of the administrative building did not have a camera watching a camera. It had Michael Hauser at his desk, badge clipped to his belt, coffee cup on a ceramic coaster, working through the morning queue. No one was watching him. No one was checking. The first fraudulent payment request was generated on the day of his promotion in July of 2016. It was small enough to be unremarkable, small enough to be lost inside the daily disbursement volume of a flagship casino property. It was a routine-looking vendor payment with a routine-looking invoice reference, routed to a bank account that was not the bank account of any legitimate vendor. The bank account was a personal account under Michael Hauser's name. The request cleared. He waited. He watched the system. He reconciled the books normally for the rest of the month. No flag, no question, no follow-up. The control architecture that was supposed to catch a payment routed to an employee's personal account did not catch it. He generated another, then another. Across the second half of 2016, the pattern took shape. He learned the rhythm of the disbursement queue. He learned which categories of vendor payment drew the least scrutiny. He learned how much he could route in a single request without triggering a manual review. He learned which days of the month carried the largest volume of legitimate traffic, the days on which a single anomalous request was most likely to disappear into the noise. He learned the language of the vendor master file. He learned which invoice references would survive a glance from internal audit and which would not. He kept his job perfectly. His reviews continued to glow. He came in early. He stayed late. He volunteered for committees. He trained new accounts, payable clerks with a patient, even temperament. He was the manager who answered the phone. He was the manager who picked up extra shifts during the holiday rush. He was, by every external measure, the model employee. The escalation came in 2018. The dollar values per request climbed. The frequency climbed. The personal expenditures climbed in step. In 2018, he upgraded his vehicle. A late-model luxury sedan with the cash purchase financed through one of the personal accounts. In 2019, the family moved out of the starter home and into a substantially larger property in a gated subdivision on the south end of Broken Arrow. The new home had a 4-car garage. It had a pool. It had a media room and a wine cellar. His wife told her neighbors that his side consulting work had finally paid off, that he had been building a book of small business clients on weekends and after hours, that the long hours at the office were translating into rewards at last. The neighbors believed her. There was no reason not to. In 2020, he opened his first Las Vegas casino host relationship, not as a casual guest, as a high-dollar player. He flew out of Tulsa International to McCarran. He was greeted at the curb. He was walked through a private entrance. He was rated on his play, comped his suite, comped his meals, comped his flights. The casino host kept a profile on him. Preferred drinks, preferred table game, preferred minimum buy-in, preferred shift to play. He was a name in the system. The money flowed in one direction, out of MNGE accounts payable, into Michael Hauser's personal accounts, out of his personal accounts, into Las Vegas Casino VIP accounts under his own name. In an architectural sense, the most damning feature of the case was right there. The accounts payable manager of one of the largest tribal casino operators in the United States was converting Muskogee Creek Nation casino revenue into the chips and the rated play credit of competitor commercial casinos in Nevada. The same dollars that were supposed to underwrite tribal scholarships and tribal elder services and tribal child welfare were being pushed across a felt table on the Strip. The Muskogee Creek Nation's gaming revenue was, in effect, being shipped out of state, across the federal map, and into the cages of casinos that owed the nation nothing. By 2022, the lifestyle was no longer hidden. A Rolex on his wrist, Louis Vuitton bags in the back of the Lexus, private school tuition for the children at Holland Hall in Tulsa, a 2022 Cadillac in the second slot of the 4-car garage, a high-end boat at a slip on Grand Lake of the Cherokees, investment accounts, brokerage accounts, cash on hand, and underneath all of it, the parallel architecture of tax evasion. Across tax years 2016 through 2022, he knowingly and intentionally underreported his adjusted gross income to the Internal Revenue Service. In tax year 2022 alone, he failed to report $7,851,027.28 in income. The total federal tax shortfall across the 7-year evasion window would eventually be calculated at $8,205,834. He had built 2 interlocking schemes: embezzlement from the tribe, concealment from the federal government. Each scheme required the other. Each scheme protected the other. Each scheme deepened the other. He knew what he was doing. He knew the segregation of duties controls he was bypassing. He knew the tribal beneficiaries on the other side of the ledger. He knew the federal returns he was signing under penalty of perjury were false. He knew the casino host on the strip who greeted him by name and walked him to the elevator was using his real name. He knew, and he kept going. The catalyst was a federal joint investigation. By late 2023, 2 federal agencies had quietly converged on Michael Hauser from 2 different directions. The United States Secret Service Oklahoma Field Office, working out of its presence in the Eastern District, had developed leads from financial intelligence reporting on movements inside and out of the personal accounts. The IRS Criminal Investigation Dallas Field Office had developed parallel leads from tax filing anomalies that did not square with the lifestyle signals an examination team could see from the outside. The 2 streams of work met. Special Agent in Charge Kyle Smith of the Secret Service in Oklahoma, Special Agent in Charge Christopher J. Altimus Jr. of IRS Criminal Investigation in Dallas. Their teams compared notes. The lines on the board began to connect. The pattern, once you knew to look at it, was not difficult to see. The accounts payable manager at MNGE was earning a salary in the low 6 figures. The accounts payable manager at MNGE was living a life that required $2 to $3 million per year in unreported cash flow. The accounts payable manager at MNGE was a known and rated VIP gambler in Las Vegas, with comped suites and a casino host of his own. The accounts payable manager at MNGE was filing federal tax returns that did not come within 7 figures of explaining any of it. Investigators issued grand jury subpoenas. Bank records came in. Casino records came in. Vendor records came in. The MNGE accounts payable system was queried under subpoena for the full disbursement history across the 7.5-year window. The forensic accountants took the records apart line by line. They matched each anomalous payment request to a deposit on the personal side. They matched each personal side deposit to an outflow. They matched the outflows to the Las Vegas casino host accounts. They matched the casino host accounts to the rated play history. The picture that emerged was clean. It was a single actor scheme. There was no co-conspirator at MNGE. There was no insider helping from the audit side. There was no bribe paid to a controller to look the other way. There was only Michael Hauser sitting at his desk on the 3rd floor of the administrative building, generating fraudulent payment requests inside the credentialed accounts, payable workflow architecture that the institutional design had handed him. The federal team built the case in silence. They did not approach him at work. They did not approach his wife. They did not tip the tribal employer. They let him keep going. Every payment request he generated during the investigative window added to the count. Every dollar he routed into a personal account added to the loss figure. Every false return he signed added to the tax case. Every flight to McCarran and every rated session at the high-limit pit added to the evidence on the Las Vegas side. He had no idea. He kept showing up at the office. He kept training new clerks. He kept boarding the flights. He kept playing at the rated tables. He kept eating the comped meals. He kept the rhythm of a man who believed he had built a system no one was watching. He was wrong. We are coming up on the moment the investigation closed in. If this case has held your attention so far, do me a favor and hit the like button. It tells the algorithm that stories about institutional accountability matter. And if you have not subscribed, this is the channel that covers these cases the way they actually unfolded. We do not look away from these stories. The full forensic reconstruction took months. Investigators pulled the accounts payable history of MNGE across the entire window from July of 2016 through February of 2024. They cross-referenced each suspect payment against the master vendor file. They cross-referenced each routing instruction against the legitimate vendor banking on record. They cross-referenced each invoice number against the actual purchase order chain. The fraudulent requests stood out clearly once the forensic frame was right. They were payments that referenced vendors who did not exist, or that referenced legitimate vendors but routed to bank accounts those legitimate vendors had never authorized. They were payments that, inside the legitimate disbursement context of the casino, made no business sense at all. The aggregate loss figure landed at $24,907,436.07 across approximately 7.5 years, across the entirety of his tenure as accounts payable manager. The Las Vegas side of the case was, in its own way, the smoking gun. The federal team obtained the casino host records under subpoena. They obtained the rated play history. They obtained the deposit history into the VIP gambler accounts under Michael Hauser's own name. The records were not subtle. There was no laundering layer between the personal accounts and the casino accounts. He had sent the money directly from his personal banking, in his own name, to the VIP gambler accounts opened in his own name at multiple commercial properties on the Las Vegas Strip. The architectural inversion was complete. An accounts payable manager at one of the largest tribal casino operators in the United States, generating fraudulent payment requests inside the credentialed MNGE workflow, routing the proceeds through his personal bank accounts, and ultimately funneling much of the $24.9 million into the chips and rated play credit of competitor commercial casinos in Nevada. The same dollars that were supposed to flow back into the Muskogee Creek Nation. The same dollars that were supposed to underwrite a sovereign government's services to its citizens. Those dollars were being lost to the house on the Strip. The tax architecture sat on top of the embezzlement architecture, like a second skin. Across the 7 tax years from 2016 through 2022, the false and fraudulent returns understated his adjusted gross income year after year. In tax year 2022 alone, the unreported income figure was $7,851,027.28. Across the whole window, the federal shortfall added up to $8,205,834. The forensic record was beyond reasonable dispute. The bank records, the casino records, the vendor records, the tax returns, the rated play history, the personal accounts, the lifestyle expenditures, the boat, the watches, the cars, the tuition, all of it lined up the same way. All of it pointed at one man. The federal approach came in early 2024. By the time the agents knocked, the case file was already complete. The Secret Service and IRS criminal investigation team had built it brick by brick, in silence, while he kept showing up to work. The agents on the doorstep were not there to ask questions. They were there to inform him that he was under federal investigation, that grand jury subpoenas had been served, that his bank records and casino records and vendor records were in federal custody, and that the United States Attorney's Office for the Eastern District of Oklahoma intended to charge him. He was, by every account from people who knew him afterward, not surprised. He did not deny. He did not produce a story. He did not invoke the alternative narratives a man caught in this kind of conduct sometimes reaches for. He retained counsel. Counsel met with the Assistant United States Attorneys. The conversation moved quickly toward a guilty plea. The negotiations were direct. Hauser's counsel acknowledged the loss figure. They acknowledged the duration. They acknowledged the tax architecture. They acknowledged the conversion of the funds into Las Vegas 5 IP play. Across several months of meetings, the factual basis of the plea agreement was assembled. On February 20th of 2025, in federal court in the Eastern District of Oklahoma, Michael Anthony Hauser stood and pleaded guilty. One count of theft concerning programs receiving federal funds. One count of tax fraud. The plea was unconditional. The factual basis incorporated the full 7.5-year embezzlement window and the full 7 tax year evasion window. He spoke quietly when the judge asked him to confirm his understanding of the rights he was waiving. "Do you understand that by entering this plea, you are giving up your right to a jury trial?" the court asked. "Yes, Your Honor," Hauser answered. "And do you agree that the conduct set forth in the factual basis is what you did?" "Yes, Your Honor, I do." The plea was accepted. Sentencing was set. In the months between the plea and the sentencing, he began to surrender assets. The cash, the casino credits, the forfeited items the federal team had traced to the embezzlement. By the day of his sentencing hearing, more than $7.5 million had been turned over to the United States. It was not enough. It was nowhere near enough. But it was what he had left. The sentencing hearing took place in October of 2025 in the federal courthouse in Muskogee, Oklahoma, before Chief United States District Judge Ronald A. White. The courtroom was the working federal courtroom of the Eastern District of Oklahoma. Wood paneling, a high bench, the seal of the United States behind the judge. The prosecution table held the Assistant United States Attorneys who had carried the case to that day. Kara Traster, T. Cameron McEwen, Clay Compton. The defense table held Hauser and his counsel. Behind them, in the gallery, sat representatives of the Muskogee Creek Nation, citizens of a sovereign tribal government whose casino revenue had been bled out for 7.5 years by the man at the defense table. The government laid out the sentencing position, the loss figure, the duration, the tax evasion architecture, the Las Vegas casino conversion, the personal enrichment pattern, the Rolex, the Louis Vuitton, the Lexus, the Cadillac, the boat, the tuition, the investment accounts, the pre-sentencing surrender of more than $7.5 million in cash and forfeited assets, which the government acknowledged but framed as restitution that would never come close to making the tribal nation whole. The Internal Revenue Service Criminal Investigation Special Agent in Charge, Christopher J. Altimus Jr., spoke about the moral psychology of the case. "Stealing from the community you are entrusted to serve is a serious betrayal," Altimus said. Mr. Hauser's crimes harmed the Muskogee Creek Nation and undermined trust in public and tribal institutions. By stealing from the Muskogee Creek Nation and falsifying his tax return, Mr. Hauser not only defrauded his employer, but also the American public. United States Attorney Christopher J. Wilson added a framing that would matter to every tribal nation in the district. The United States Attorney's Office is committed to pursuing and prosecuting those who defraud tribal nations in the Eastern District of Oklahoma. Judge White imposed sentence: 70 months of federal incarceration on the count of theft concerning programs receiving federal funds, 36 months of federal incarceration on the count of tax fraud. The two sentences would run concurrently for a total of approximately 6 years in federal custody. Non-paroleable, in the federal sense that good time credit would be the only mechanism to reduce the time served. The restitution order was layered. $17,337,949.50 owed to the Muskogee Creek Nation. $8,205,834 owed to the Internal Revenue Service. The pre-sentencing surrender of more than $7.5 million would be credited against the totals. The remaining balances would follow him into federal custody and out the other side, and for the rest of his working life. On November 10th of 2025, Michael Anthony Hauser self-surrendered to the Federal Bureau of Prisons. The Hauser case was subsequently named to the IRS Criminal Investigation Top 10 Cases of 2025. The structural lesson, the one the federal record left behind, was not about a single bad actor in a single accounts payable seat. It was about the architecture itself. When an accounts payable manager holds both payment request generation authority and routing instruction control, the institutional check on single actor capture depends on the rigor of segregation of duties, on the independence of internal audit, and on the breadth of tribal financial oversight. At MNGE, across 7.5 years, those checks did not hold. The Muskogee Creek Nation will work to recover what can be recovered. The federal record will stand. And the next accounts payable manager who sits in that seat will sit there knowing exactly what came before. That was the Hauser case. The story on your screen right now is even harder to believe. Click it.